Oh, yeah, know when you know, and you know, I love all them patrons in the comments. Paul, I get a little southern accent going when I get really...
You got a lot of accents going. By the way, did you like my French accent the other day?
Oh my God.
French, Russian, whichever one it was.
It was some compilation
Welcome to the show, everybody.
I didn't say that.
It's your favorite bearded Viking hipster sexual. This is Seth. I'm here with Paul. It's Paul, right? Paul Gabriel.
You made Don very happy.
And Mo is here. Trader Mo, welcome to the big show. It's your first show in a while. I'm kidding. I love you. Guys, hello. Can you hear me? Today's the day, April 15th. Hello. We are here. It is software day. And I know you've been frothing at the mouth. I can hear Paul's grundle purring from here because today is the day. You get the software. Paul, let's cut to the chase. Let's cut to BS. When do they get it? What's going on?
So first off, we had a record number of people in this chat, in this live stream today. When we went live, we had 180 people, and our previous high was like 105. So clearly it's a big day. Guys, this has been a long time coming. Back in November, I said it was going to take 9 to 12 months to release this software. We're here 6 months later, and we have the software ready. We've been working on this thing, 3 full-time developers for the last 2 months. Obviously, before that, it was only 1 developer. We are so excited about this. So here's what's going to happen. At 3 p.m. Eastern time, an hour and 59 minutes from now, you're all going to get an email on the email that you signed up on Patreon. It's going to give you a link with a code. You take that link, it's going to ask you for your email, you enter it, you enter the code, and then it's going to ask you for new passwords, and you have access to the website. Now, I want to make a couple notes here. I want you to see. You will be on our developer... Oops, it's not hooked up here. Let's do that first. So, what the heck?
It's hardwired, Paul. Tim, will you get in here?
No, I just got to do this. I have to reattach it. Don't worry.
I love you. Mo, what are you doing in the morning, by the way? What are you talking about in the morning with the bid NAS?
The morning show. So today we did our first morning show from my home studio that Seth set up. That backdrop's incredible. And so it's just news, and I go over your stocks and whatnot. It is starting to be every single day, Monday through Friday, every day, 9 a.m. to 9:30. Come make money.
This will be the last Thursday live stream we do for a while. What we're doing is we're cutting back the live streams, making them more exclusive and just plain better. And we're going to refocus our evaluation, giving you top quality videos. But the trade-off is that wonderful Mo and his handsome self is going live every day before the morning bell at 9 a.m. So you guys will be able to watch him Mo, I'm excited. You know, I get out of bed, I get the kids on the bus, I get in the tub, I get a coffee, and I listen to you tell me, you know that, right, Paul? You know, I get in the tub, and everyone who's watching, they know it. It's tub time with Seth and Mo. But Paul, going back to go tell us.
So guys, you will be on the dev site. So for the next 6 to 8 weeks, like when I released it for a couple days or a week or whatever it was a few months back, you'll be on the dev site. We're going to look for bugs. Guys, keep note of this right here. When you hit the report bug function, you can report a bug specifically. You can even have it pop up and record your screen to show exactly what's going on. This is the most important part of the site right now. I need you guys to all focus on looking for more and more bugs. This site is great though, and we're going to keep adding to it. And in 6 to 8 weeks, once we reported all bugs, we're going to go to the main site and keep adding more to the site as time goes on. So guys, remember, you're going to watch for that link in the email that you signed up for on Patreon. So make sure you go to that email. I cannot tell you how excited I am. We almost hit 2,000 subscribers to this software.
Patrons, yes.
Patrons who became subscribers for this software. And it's all, I mean, beyond excited. We have so much to do. I never showed you guys our retirement calculator.
Now, this is huge. Let me stop you, Paul. Let me build this up a smidge. Now, folks, if you're out there, I'm sure you guys have seen these videos. Graham Stephan does it. I don't know if Kevin, but there's a lot of videos about retiring. This is a huge portion of, this is a huge topic on our show because I bring Paul, this guy that talks too fast and scribbles too much on this board, I bring you your questions. And as a normal person, I heard for years, Mo, that I'm not going to have enough to retire. No one's going to have enough to retire. The fear is setting in. For my wife and I, it was a strain of arguments about how to save money, what should we put our money into. And so when Paul sat me down and taught me how to evaluate where I'm at in the world and where I might need to be, the idea of how I can retire and when is a big topic. And other YouTubers do, what do you need by 20? What do you need by 30? What do you need by 40? That's all fine and dandy. But you have to see what Paul Gabriel's going to show you right now because it's literally astonished me just this week. Go ahead, Paul.
So if you guys send me an email saying here's a bug, I'm just going to respond back with click the report bug at the very top. So I just want to make sure everybody knows that. Do not email me. We have 2,000 people using this now. My emails will get inundated because I'm sure we're going to find hundreds of bugs. So don't email me. Hit report bug. Be as descriptive as you can. Be as specific as you can. So now, going to the retirement calculator. I've had people tell me this is the best retirement calculator out there, and here's why. Not only does it, right now, most retirement calculators say, hey, if you save X amount per year now, here's what you'll have at age 65 or 70.
And not too often, can you make that bigger, Paul? Not too often. Like that was what my point is. Sometimes someone says, well, when you're at 60, you'll have $3 million. Whoop-de-freaking do. I don't know what that means in terms of my money right now.
And $3 million sounds like a lot of money. This is great.
Absolutely.
But over 40 years, $3 million is worth $750,000 after inflation, okay? So $750,000 is still a lot of money, but it's enough to live off of. So this is what our software does, and this is what I'm gonna do. Let's say you're 30 years old, you wanna retire at 65, you currently have $100,000 in savings, and you save $12,000 per year. Now, this allows you to increase how much you're gonna save for every single year. Every year your income's gonna go up, so shouldn't you save more? Of course you should. So let's say we increase our savings by 5% a year.
Hey, you know who you're showing this to, Paul? And I break this down, folks. I've been very lucky. I hate to interrupt, and people tell me stop interrupting.
So you still do.
But I tell you what, I have had the pleasure to sit here and learn from this guy. I feel like I'm in my own classroom for the past going on 3 years. And guess what? Of course, my wife, Beth, is watching. Beth, get ready to have your mind fried by this retirement calculator. I can't build it up anymore. I'll shut my mouth. Paul, go ahead.
Are we doing your numbers or are we doing our numbers?
Let's do mine right now. Beth, you got to see this.
Okay.
My wife's on.
Yeah, this is incredible.
So age 40.
I'm 40.
You're going to retire at 65. Your current savings are $420,000.
$420,000.
You currently save $12,000 a year?
That's correct. Now, the people can't see so much behind
I know,
you.
but
okay.
Okay, so
okay. Yep. Keep
so
going,
right here, he saves $12,000 a year, $420,000. He's going to increase by 5% a year. Annualized returns. Let's assume he just matches the market at 10%. And during retirement, the other thing is you're going to have money during retirement, and it's going to grow. Now, should you have your money as aggressively invested during retirement? Probably not. So I'm taking that 10% down to 6% during retirement. What age do you expect to live to? Well, Seth and I talked about age 90 for him. Because as time goes on, every year that passes, the average lifespan increases by 3 months. So you should expect out there, the younger you are, the longer to live. I expect to live to 100. Seth said 90. I didn't argue with him on that one, but Beth will probably be longer than him. And inflation, let's assume inflation is 3%. Now, what's Seth's current income? And I'll also ask you for your current income. He and his wife, we put down $200,000 just to be safe right now. It's going to go up because he's part of this channel. It's going great. But the big thing is, what percent of your income do you want to have in retirement? Because people don't think about this.
I've never seen this. I said I was going to be quiet, but of course I'm the host. I've never seen this factor in, Paul, until you open my eyes. Is how do you watching want to live when you're retired? You got the grandkids running around. You want to go traveling. You want to get that you want to Winnebago. You want to get that RV and go out to Devil's Tower. How do you do all that? How do you want to live? Tell me, Paul.
So I always tell people I want to live better in retirement. If I were ever to retire, I'd want to live better in it. Now, all your expenses, you're probably not going to have a mortgage at that point. You probably have a paid off mortgage. You're not going to have kids anymore, so you don't have those costs. But your healthcare costs will be higher, things like that. So just to be safe, let's call it 150%. So if Seth's making $200,000 today, maybe he sits there and goes, I want to live a lifestyle of like $300,000 in today's dollars when I retire. We click generate, and guess what? It tells us
How am I doing?
that Seth does not have enough money. You need to save more money. It's saying to Seth, based on these assumptions, you need to save about $24,100 more per year.
Now this accounts for I never thought about is those years from 65 to like 90 or 95.
That's 25 years of living. That means from here to death, you're halfway to retirement.
Mm-hmm.
So it's telling him right now, not only do you not have enough to retire, it tells him how much more he needs to save to retire, to die basically broke, okay? One of the things I will add to this at some point is how much you want to have upon death. And I know that sounds morbid, but a lot of you out there probably want to give money to your estate, to your kids, or your family members. So you can sit there and say, listen, not only do I want to retire and die with money, I also want to have X amount of dollars in retirement so I can leave to my family.
So this is at 150% of what I want to live.
Yes,
at.
so let's go to 100%.
This is just like take my money I have now, which I'm living very comfortably, and what's
You're very
saying?
close.
You're very close. Yeah.
Still don't have enough. You need to save about $2,100 more per month. Sorry, more per year. So let's just take this to 15 grand just to be safe. So it shows right here at age 90, they have a deficit of $1.5 million. Let's change that to $15,000. And look at this, guys. He has enough for retirement. Yes, and he'll die with about $650,000 in his bank account. Now, is this a guarantee? Absolutely not. If Seth is able to learn and do better in investments by just 2% a year, bringing options in, bringing value investing in, just 2% a year, how does that change everything?
This will be phenomenal. And of course, I'll be saving more because my best years are yet to come. But go ahead, Paul.
We're going to still do the $15,000 savings, 12% in retirement, and let's make this 12% up to retirement, 8% after. Watch how different this is.
I will now die with
$36.5 million.
Beth, $37 million.
That's how important this 2% difference is per year versus 10% versus 6%.
That right there is your options and dividends.
Let me ask you a question. Is this software worth it when Seth just looked at this and goes, oh my God, if I just save $3,000 more per year, I'm going to have $36 million and learn from you guys a little bit?
Yep.
That make the software worth it?
How can that be, Paul? I go from $600 to $36 million.
Because it's the compound interest of 50 years of investing at 2% higher per year.
Albert Einstein said compounding interest is the most powerful tool in the world.
This software, how much is that in Bitcoin?
That's
That's
the
a great
software.
question.
We were in the Mexico airport when he showed me the software when it was almost done, and I'm just like, this is incredible. I've never seen it. Quinn's brother,
Quinn's brother does like wealth management for people.
and he was like, this unsolicited. He texted the group chat and he goes, Paul, this is the best retirement calculator I've ever seen.
And I called him like, really? He's like, yeah. He's like, all the other ones either way too complicated or way too basic.
Most of what I've seen, they're too simple.
I could make this way more complicated, but I'm not going to. Remember one thing. This doesn't include your house value. Seth lives in a house right now that's worth about $550. In 50 years, it's probably going to be worth $4.5 million.
Paul, my goal this year was to save $30,000 a year.
Okay.
So can you change that 15 to $30,000 a year?
No, because you're probably going to throw up. You're probably not going to understand this kind of money. $60 million.
$60 million dollars in gold bullion. Now, folks, if you're out there, if you're a patron, if you're in the Bidnass Nation, I'm not even sure you probably knew this was coming. This calculator is incredible, and I think something that you're going to look back on year to year to year. And really, for us, when Paul taught us all these numbers, the strain that was lifted off of my back of learning that this can happen to me, retire with $60 million in only the next few, it's absolutely incredible. And let me put this in a little perspective real quick, folks. I'm going to slow down a bit so I'm not going off the damn ledge. Our friend Stock Mo, this complete imbecile with hundreds of thousands of subscribers, you can head on over to his Patreon right now. And for $20, you get Discord access and to look at his ridiculous portfolio. That's it. We've been giving you the Discord access, Mo, for months now.
For months.
The Discord is off the chain.
$8.
Thousands of messages every single day. This is icing on the cake. And currently, check your watch, it's cheaper than other people's Patreons. What more do I have to say, Paul? I'm about to lose my mind.
Your wife's telling you to be nice, by the way.
Well, I'm off the chain today. You know that. But that's the point, folks. What we're giving you, we see the comments, this Patreon's too expensive. We see the comments. What we're giving you, it's completely absurd. I'm not going to make this a whole Patreon. We wanted to go over the software, so I'll slow down with the Patreon push. But if you look at other people out there, there's absolutely no comparison. Now, we haven't even shown the best part, Paul, of course.
The software itself.
Show them the 8-pillar software, what all the peeps have been waiting for.
Okay, so.
What's the delay, baby?
Thanks.
Oh, sorry. So, 8 pillars, guys.
Here it is.
I think everybody's seen the 8 pillars before, but guys, just to remind you, now here's the great news about the 8 pillars. We're getting more and more data. One of the things when we go live in 6 to 8 weeks after the bugs are figured out, we're going to get data going back to 1987. We're going to have the charts going back to 1987. We're going to be adding I want everybody to remember, and I'm going to beat this over everybody's head forever. The software will only get more and more benefits as time goes on. So what you're paying for today, oh, by the way, the Patreon is going to $22 right after the show. Right when the email goes out, we're canceling. No,
something we'll cancel.
Right when we cancel right when we send the email out for everybody to sign up, the Patreon goes to $22. It's currently $18. So for those of you out there who have not bought the software yet, you literally have 1 hour and 46 minutes to decide, do you want to save $4 a month? That's it. Yep. And not only that, when it goes to $49 and higher someday, do you want to have it for 18 bucks? That's the way to do it right now. I know a lot of the people on these live streams are already patrons, which is awesome and great. But remember, we're getting 20, 30, 40 signups a day. You got to sign up. It's wonderful. It's great. It's only going to get better. The software will be the focal point of this channel going forward. That is a big differentiator that we have to other channels. We're providing software that enhances what we're trying to teach, and it's going to enhance everything we do. There will be things where when you look at Microsoft, there'll be a section that says, here are all the videos you've done on Microsoft. And it'll show you all of our videos on Microsoft that you can watch them individually. There'll be a comment section at some point. Let me comment on this. Hey, what do you think about this? What do you think about this? We are building, Tim and I spent yesterday, we just hired somebody, one of our great patrons, Nick Larmore. He's going to be in charge of our customer service going forward on Everything Money. And we're going to keep building our customer service to be better and better and better, because nothing I hate more in this world is when I need help with something, I can't get a hold of somebody.
I hear you, not to get into a business sense, but I hear you on my shoulder when I'm trying to pay a company money and they won't get back to me. And likewise, when clients are getting after me trying to pay money and I see that email sitting in the inbox. So I know that's a huge thing for Paul, and we're going to make that right here.
And to answer Marco's question, Marco, it will cover European stocks soon. The first set, and that's part of the whole next 6 to 8. I don't know when all these things are going to be done, but the next step are many levels, and European stocks will be available this year. That will happen this year. Because I want to make this all stocks in the world, basically ETFs. We want to make this White Charts Junior. I'm telling you guys, I started this thing 6 months ago. I was spending 30 grand a year on software. I'm already up to 100 grand a year plus. I've already over quadrupled that money, about quadrupled the money from 30 to 120 grand a year. I'm spending 10,000 a month just on software for this reason. I want this to be the best software out there. And the software cost, pardon me, at some point will probably touch $1 million. I'm willing to bet in the next 3 or 4 years, our software costs will touch $1 million. As long as we keep growing and I can provide more benefits, the focus of this channel is our software.
Run through it a bit. Show me some of the different pages and what we can do. Did you already do that, or I missed it?
I've already done that in the past, but here you go, guys. Like everything, this is the main metric page. It's going to give you everything you need here. Oh, by the way, we're also working on a redesign already. So it just got released. It gets released in an hour and a half, and I already have somebody working on a redesign. Because Tim and I looked at Tim and I go, Tim, I don't like the look. He goes, okay, let's change it. So we're already looking at a redesign. All the main metrics here, you can adjust your chart, 6 months, year to date, 1 year, 5 years, 10 years. At some point, it'll be max, going back to 1987. You'll have a custom range, boom. Income statement. Check, please. There's all your income statements. Instead of doing annualized, it does every 4 quarters. You can do annual, quarterly, trailing 12 months, 4 quarters, and per share quarterly data. So it'll tell you per share on the quarter basis. That way you can compare quarters to quarters from year in and year out. You have your balance sheet, cash flow statement, same thing, 8-pillar page. That's the big one everybody wants. It repeats the metrics from the first page, does the 8 pillars, and we all know the 8-pillar portfolio. Guys, the 8-pillar portfolio is incredible. You can build your own portfolio of stocks, figure out how they look as a portfolio in terms of
performance and 8-pillar performance.
8-pillar performance.
Like a little ETF you're building for yourself.
Yep.
You know, Paul, I should go home and put in my little book to beat the market stocks.
Yes.
And see
cool.
how they look at now at the moment. So.
Yes. Yep. You can put up to 50 stocks in here. And this basically says this portfolio right here, guys, is just overpriced. The rest of it's all awesome.
Paul, I see. I think Paul needs to take a small breath at the moment because we're so excited, and I'm just fired up. Mo, you have a couple stories to tell. Now, we've been talking for a while. We've been showing off, obviously, the Everything Money software, which you'll get access to 3 p.m. today if you're getting in late. If you've just joined us, Mo, talk about some of the wins. You are blowing my mind with what you're doing with the middle Patreon tier. That wonderful Bid and Ask Nation, your morning trades, your group trades. Tell me what you got, baby.
I'm blowing my own mind. I thought about this today. So we exited Amgen today for a little bit of a gain, but I had a guy message me over the weekend. He said, listen, you don't have any degree, you don't have any professional training certificates, whatever. My wife is not on board with this. So I said, just give me a shot, give me a shot. He doesn't have very much money to play with. Today on this trade, his trade took 2 weeks. He stuck with me. He made $2,200 today. I realized today that as we do trades as a group, we do not have one loss yet in 4 months. The point, it's not because we're not going to lose. Of course you can lose. the point is that the way that I do things, instead of losing, maybe we'll only make 0.5% instead of making that 5 or 10% that we want to make on the trade. So it just blows my mind the amount of money that people were like, yes, I made this today on Amgen, this today on Amgen. Cardinal Health, we made a ton of money on. H&R Block, we made a ton of money on. It's just blowing my mind. Today, we had 10 upgrades in the past hour to hour and a half or something.
Yeah.
So
it's crazy.
Mo and I are working towards some sort of new program that we're going to offer a video series somewhere entitled around like the employed investor. What a 9-to-5 working mom or guy with a dad bod can do in terms of trading, where we're not dedicated to this on a 15-minute chart, but we can actually make some trades, make some money. I have a portfolio primed and ready. Mo, do you want to start with 20,000? Something obtainable.
Let's do 20,000. So
go ahead.
No,
go ahead.
okay.
Mo.
So I had somebody today say, hey, I work a lot. I don't have time to trade. I don't have time to be in the Discord all day. I said, that's perfectly fine, because everything that I do is long-term, weekly to monthly trades of being in one stock. So what we decided to do is I'm going to pick a basket of 5 stocks, and we are going to invest these stocks long and short for the whole year. So every day I'm going to make you some kind of update and say, let's buy Apple here. In 2 weeks, if I want you to sell Apple, I'm going to make a video update that says, today we're going to sell Apple. And then we're going to wait for it to go short, and then we're going to go short on Apple. So you're going to have 5 stocks up and down. All you need to do is tune into my video update once a day, and I'm just basically going to tell you what to do if you do not have time to be in the Bid and Ask Nation 24/7 with the Discord.
And remember, when you're part of the Patreon, any sort of classes that we make that cost money, you get for free.
Yes.
So online classes that we might charge $59 for, you get for free as part of the Patreon. Like, that's what I'm sitting there saying. It's just all makes perfect sense. We're going to start doing live events. We're going to talk about, mindset things. One of the things we haven't even talked about yet is mindset. Guys, this channel is changing so much to the better. We're just going to keep adding things, but not in the way of it becomes overwhelming like Cheesecake Factory with 8,000 options. No, we're just sitting there and going to be adding more that's going to provide the financial benefits that I've learned over time. I've read dozens and dozens of books, maybe hundreds, about investing. I usually pick 1 or 2 things from each book and they become my mentality. That's what we're going to do here. It's just going to be what I have done over life that's changed my view of the world. Seth, we always talk about, earlier I was showing them the numbers about our growth. And I said, well, imagine what we're going to be 5 or 10 years from now. And Seth just went like this. And I go, what's the matter, Seth? He goes, I just don't think about 10 years from now. And I'm like, I only think about 10 years from now. Like I shouldn't say 10 years. I usually think about 2 or 3 years from now and not today. Because to me, what matters most to me is my life going to be better 10 years from now, or not? If the answer is yes, great. How much better can I make it? That doesn't just mean money-wise. It also means mentality, happiness, etc. So we're going to be incorporating all this. It's not just money-related. This is also a mindset show because everybody out there, like Laura just said, that's why she's spending time learning trading. She said, I'm that person who's too busy to do this. And I said, you make time for the things that matter to you. It wasn't a knock on Laura. It was just saying, hey, that's what we all do. I tell people now, instead of saying I don't have time for that, I say it's not a top priority for me. Because you have to make decisions on these things.
Paul, people are asking about, and Mo, maybe you can clarify, maybe Tim can help about the idea, if people want to try trading,
yes,
we're offering a one-time jump up to the 2nd tier,
yes,
and you can backtrack if you like.
into your price point.
So before...
For 30 days, 1 month.
Before, if you left your tier and went to a higher tier, you lost your spot in your original tier. Now we're making it where for 30 days you can leave your current tier, go to the higher tier, and you have 30 days to decide to go back at your current tier. So, for example, if you're the $12 tier and you went to 62, and today the price goes to 22 for the new $12 tier is 22 today instead of 18, you can now go back to the $12 tier within 30 days. If you wait beyond 30 days, you have to pay whatever that new price is, which might be at that point $25. So the whole point is we are reserving your spot so you can try out the next level for a month without any risk of losing your original spot. Okay? And remember, on the higher level, you get all, because there'll be 2 aspects of the website that are not going to be available to everybody because of how much they cost us to develop. So on the next highest level, then you get all that access and it won't even cost you a single dollar extra.
I think we've done it. We've sort of described what we're going to do,
so.
and people are jonesing for us to get into what we deliver, which is our analysis of companies. And before I do that, real quick, of course, make sure, as always, we are fondling that thumbs up. Look at Paul's belly and his beautiful abs and his arms.
I know that's
showing
ab.
off.
That's probably fat now.
Just tickle that like before we get cooking, and we will get after it. I would say, let me preface this too. We are starting Paul reaction videos, and Paul will watch like for the first time. We're going to show him some of these crazy videos out there, and he's going to react. So we're going to start releasing those. But Paul, I'd like to pull up a stock.
Well, by the way, Susie keeps reminding me, mention the Teslas.
Oh well, okay. One more is it naturally?
Did you mention it?
We did not.
Oh.
We hit 29,000 today. Of course, we thank you so much for your support, which means we are 21,000 away from hitting 50,000 subscribers and giving one of our patrons a brand new Tesla Model 3. Now, Paul, this is incredible. Of course, it's just an absurd giveaway compared to other people. Literally, other people give away a backpack, and we're giving away a $38,000 car. If you're in the States, you can come by. Listen to these guys whisper behind my back. If you're in the States, you can come by. We will have a whole show dedicated if you win a Tesla. If you're overseas, legally, you can't get a Tesla, but if you trust what we've been doing in all of this, you will be rewarded handsomely, I assure you. What's going on, Paul? Tim, what's
I only have 5 spots left in most tier. That's how popular it is. People just keep filling it up, keep trying it out.
15 upgrades since
15 upgrades today.
130, yeah.
5 more spots, and the price goes from 62 to 63 or 4 or whatever it is. So the goal here is to get this healthy balance. We want to build value. We want to reward the people who started out early, who want to make money. Trust me when I say most chats worth $150 a month because of what people are making. Now, obviously, if you have $500 a trade, that's different. But anybody with $10,000 a trade can probably justify a lot of money paying towards this. You can make a lot of money.
Now,
so anyhow.
Now, Caleb is saying I'm in Canada with a frowny face. Caleb, I don't know how else to say this legally, but if someone overseas wins, we will absolutely make this right in any way, shape, or form we can. I don't know how else we can say that without saying you're getting something, but don't you should not turn that into a happy face. Paul, shall we get after and do what we do, baby?
What are we doing today?
Well, I want to look at this company that people have been asking about. Someone just requested it, and I want to look at it. And Mo, you'll probably have some thoughts on this. The company is Chewy, Paul.
Chewy. Oh, we've done Chewy before, haven't we?
The ticker symbol is CHWY. Chewy is the company. It's an American online retailer.
So remember, we don't have 5 years of data on Chewy.
That's okay. I want to get your take on it.
Okay, so what we're going to do here is when you're on this and you do the 8 pillars, it's not going to give you the data because we're looking for 5 years of data. Part of my issue is I want to look at long-term companies. So buying ones that have only been public for a few years, I want you to do the mental math and do the math yourself to do the research. I want to focus the 8 pillars on 5 years of data and more.
What I'd like you to show is maybe why someone like yourself may or may not be buying Chewy regardless of his age.
I gotcha.
Go ahead. So this company, Paul, let's start the 8-pillar analysis of Chewy. What is the market cap for Chewy?
$34 billion.
Is there a dividend for this company?
There's no dividend. They actually lost $175 million in the last 1 year. So there's no PE and a negative profit margin, 2 X's to start, right? Because they're new. They just went public. They're trying to grow. They're probably spending a lot of money on marketing. FYI, I love Chewy. I use Chewy. I buy off of Chewy.
But is the stock something you're buying? Dun, dun, dun.
That's the question.
So we don't have revenue growth. Show us the revenue.
We have revenue growth. It's just
ahead.
not going back 5 years. They did $2.35 billion in 2018. They did $5.6 billion last year.
That seems good.
That is good.
Profit growth on that same time period.
They went from losing $200 million to $175 million. So that's a check mark because it lost less money.
They lost less money. How about shares outstanding for this young company?
X, 396 to 409 million. So that's an X there. So again, guys, new company. They're trying to establish market share. They're obviously competing with Amazon and Walmart and all the other companies, but they're really trying to win people over with customer service. I've heard that thousands of times from people who have used the service. They're all about the customer service.
Frank is saying, doesn't Petco own Chewy? Mo, do you know about anything about Chewy?
I'm not sure.
Somebody look that up and let us know. We are doing this in a live stream, of course. So a COVID accelerated Chewy sales. Juan is saying, well, that's probably true.
Oh, I'm sure. They're all online.
Let's look at pillar number 6 is current assets over current liabilities. Can they pay their bills, Paul? 1.14
billion versus 1.32 billion. That's an X. They don't have enough cash on hand to pay their current debts. So that's not good.
We've been getting comments, Paul, in a couple of our videos that your stock picking and what you need to buy into a stock is too strict. And people are saying, are there any stocks to buy? And I said, well, couple this with if there's a huge collapse, what will some of these undervalued stocks do? So a company that's already overhead in a good, when they're underwater already in this great time, what can happen to a company like this if obviously there's a huge correction?
So one of the great things you can do, especially with our software, go find the companies that make the most sense that are just overpriced. Find the ones that have the best balance sheets, the best future. Value them and say, okay, add a list of 100 stocks maybe, it doesn't matter, and pick a price for each one and set an alert. Alerts will be available on here at some point in the future. That way, when it hits the price, you can start buying it. Remember, just because things are overpriced doesn't mean you don't have work to do. Am I being a little more cautious? Depends who you ask. Our investment friend Gary is way more cautious than I am. Like, he sits there and thinks that some of my buys are like, oh, I wouldn't do that because of this and that. I'm like, oh, well, I like it. You know what I mean? So it all depends on the kind of investor you are. But from a financial perspective, it's money in, money out. At the end of the day, what matters is what assumptions are you making on your analysis. And that's it. I'm not always going to be right. I'm not always going to be wrong. But you have to pick the style that works for you. And if my style is part of it, you might modify it. Because my style is the same as Gary's, but we just have he has stricter requirements than I do, but he's also going for much smaller stocks so you can find those deals in.
Kevin's asking a great question. Can Paul show where in the 8-pillar website if Chewy is overpriced? How are you, we determine our overpriced or underpriced?
Okay, so let me pull up Microsoft.
From market cap. Okay, go ahead.
Microsoft's a great example, and here's why. Look at the 8 pillars here. Great profit margin, great revenue growth, great net income, decreasing shares, they can pay off their debts, cash flow growth is there. The 2 value metrics are price to earnings and price to free cash flow. That's how I know it's overpriced. Those 2 metrics alone tell me this is a great company that I just want to pay a lot lower price for. How much? That's for you to decide. It's all about when we create the stock analyzer tool, which will be coming out in the next 4 or 5 months. You'll be able to input a company, make your assumptions, and it'll tell you, here's what you should pay for the company today.
That's what people are asking, so I'm glad you brought that up. Social Dancers, our gal from Toronto, saying, will the software show suggested or target buy prices? And you just said that's the answer.
It'll do it based on what your assumptions are, of course. Always be based on your assumptions. What's up, Mo?
It's sold out.
It's sold out, guys.
I'm making a new one.
Tim says he's making a new.
What price are you putting on it, Mo?
63.
$700 million. Okay, we're going back to Chewy, Paul. Let's get back to Chewy. We just did current assets over current liabilities, which is pillar number 6. And now we're going toward what is usually the most important metric, which is free cash flow growth, baby.
So there is no average free cash flow. It's not 5 years. They went from a negative 128 in free cash flow to a positive 19. So it's increasing. But remember, the company is 36 billion. Let me do all these zeros
34.
Whatever.
Okay.
34 billion. And the free cash flow last year was 19 million. Okay, can somebody do the math for me?
Probably not me, but go ahead.
So take those off, take those out. Whatever. What's 34,000? It's 170? No.
34,000
1,700.
divided by what?
1,700, call it.
Okay.
34 billion divided by 19 million.
Yeah, 1789.
Okay, so 1,800. The price to free cash flow is 1,800. Now, with that said, it's a fast-growing company.
I'm sorry. I'm so stupid, Paul. What is that number again? What does it mean?
This is the price to free cash flow. That means for every dollar of free cash flow, you have to pay $1,800 to get it.
Come on.
Yes, which means, by the way, that's on last year's numbers. The question you have to ask yourself is this going to go up? Probably. But let me ask you this question. Where does that have to go for you to be willing to pay $34 billion for it? That's the question you ask yourself. Every company has growth potential. Everybody in the world thinks a company has growth potential. The question is, are you paying a cheap enough amount where you can get enough return on that growth potential and still accommodate things going wrong? Because guess what, guys? Things always go wrong. Amazon didn't hit their price targets, didn't hit their goals for a decade, like literally a decade after they actually had the goal. And Amazon's one of the best companies in the world.
The stock price for Chewy on February 12th was $118. It's currently $85. Are you getting anywhere near this, Paul?
I just saw a record, by the way, 401 watching. You see the 401 right here, right?
Oh,
now it's
nice.
400.
Nice.
What was that, Seth? I'm not touching this, and here's why. I love Chewy. I want to wait for things to settle down. What's going to happen with the company? How are they going to fight Amazon? I mean, I look at these things thinking, I'd rather just wait for Chewy to get more established and go, okay, now we're stable and now the excitement has passed. I like to stay away from the excitement. Whenever people are flocking to an area, I go, let me stay over here. Because if they're flocking to an area, it usually means something's being overhyped. Because remember, stocks are merely supply and demand. The more demand for a stock, when demand goes up, price goes up. So I'm going to sit there and say, wait, let me wait for demand to go down. And then stock price will go down. Because I'm trying to buy cash flow. I'm not trying to buy baseball cards. I'm trying to buy cash flow. So my goal is to pay as little as possible for every dollar of cash flow. That's it.
Mo, what are your thoughts on trading, Chewy? They initially asked you what your thoughts, but this has been brought up multiple times. I'd love to get Paul's thoughts, but go ahead, Mo. Go ahead, baby.
I like this a lot right now, and I'm going to say what everybody wants me to say. I would be putting a tracker share on this if you want to, but I am going to be putting this on my watch list of 5 stocks right now. And what I really like about this is this is a year out. So they just kind of went sideways for a while, but look how when they went through this sweet spot area back in October, and then they just kept climbing and climbing, going sideways here and just kept climbing and basically doubled their price. They went from basically $60 to $120 a share. Now they're kind of down here, just building up that energy, consolidating, going sideways. All of a sudden, this red line is going to come up through into the sweet spot, and we're going to be able to ride this thing up to $120 a share. So I'm hoping that we can get into this maybe $96 a share, $97 a share, and make that ride to 120. So Bid and Ask Nation, put this on. I know we talked about stocks that we need to find to trade now. This is one of them.
If you have a question, I see some questions coming about Patreon. You can cancel Patreon anytime. We can always be reached through Patreon if you have billing questions. And of course,
and soon we get Nick on board fully. We're going to have an email address. You can email customer service at everything or something like that. That way you can get your questions across. But here's what I want to say about the chat. As everybody knows, our chat gets very busy and it's getting busier and busier. I'm not here to nickel and dime people. We're going to have a super chat. We have a super chat right now. If you give us $10, we will do any stock you want. Now here's the thing. I'm not trying to make 10 bucks. YouTube gets 30% of it. We get 7. I'm donating 100% of that money, 100% of the $7 to a charity. Faith Alive in Africa is a good charity that I like that I donate to. I'm going to be donating to them. They do HIV drugs for people in Africa. So that's what I'm doing. I'm not trying to make money off the super chats. It's just a way for us to control the conversation better, all the requests. It is going to charity. I'm sorry if you think that's bad, but it's what I'm going to do because I don't want to. When we have 1,000 people live, we want to make sure we keep it organized.
We got a great question from Omar saying, what are the cases in which you would place a high emphasis on price to book value, Paul? What does that mean?
Okay, so book value is something to look at. I care more about the growth in book value as opposed to price to book. Back decades ago, when businesses were a lot of manufacturing and fixed assets, price to book probably mattered more. To me, I'm more interested in how is book value growing over time. And if you'll see right here, guys, one of the metrics on the main page, as an example, if you look right here, is the book value growth over time. I am looking at book value growth. I'm not as concerned about price to book. I'm more looking at what's it growing at. That's my opinion on that.
Folks, if you're asking about the software, Paul, people are jumping in and out. Will you tell them one more time how they're going to get access? If they're patrons and they're getting the software today, how will they get it?
Okay. In Africa, warlords will take your money. Okay. 3 o'clock today, whatever email you use to sign up for Patreon, you will get an email from us inviting you to join our website. It'll be on the developer website to start. 6 to 8 weeks. I want you guys to report every single bug that you find. Remember, guys, bugs. You click this report bug button at the top, right up here at the top. You click report bug, and you can add your feedback, take a screen video. You can highlight, you can comment, you can write a pen like, oh, look at this, etc. You can do a lot of stuff here. It's incredible. And it reports the bug and sends it straight to our developers. Right, Tim? Goes right to our developers, and they'll start working on it, adding to the list of bugs to fix.
Thanks to Susie with a $10 donation with the free poncho campaign. If you've been in the Discord, she doesn't want to stock. She just follows us religiously.
Susie's in the Bid and Ask Nation.
I'm sure she's slaying it. Poncho is the monkey at Paul and Mo's Mexican house. It's a 40-year-old monkey that's been in a cage since the late 70s, and they want him out of there soon. I'm guessing at some point, Paul will either buy the monkey and release him into the wild, who knows, or just bring him to the show with us because he's probably smarter than me. Okay, shall we move on then, Paul? Alex was wonderful enough to give a super chat, and he'd like to look at, this is amazing, Paul, just like that. We can look at the ticker symbol NET. NET is net. What company is this? If you're watching this later, obviously this is live. We have no clue what this is, and we have definitely done Cloudflare. Look at this. Okay, we've done zero due diligence on this, but we're going to give it a shot and see what it looks like. Cloudflare
oh my lordy,
is an American web infrastructure website security company that provides content delivery, network services, mitigation, internet security, yada yada. Distributed domain name servers. I've never heard of this. What is it, Paul? And what are you shocked by?
We need a Poncho Patreon level. We're gonna have a Poncho Patreon level here.
Yes, we are. Yes, we are.
Remember at 3 o'clock, we're going to add another Patreon level.
Here we go. Cloudflare, internet company. Let's start.
Guys, $21.5 billion market cap. $430 million in revenue, and it lost $120 last year. So automatically an X on PE and profit margin.
Oh, boy.
Very good gross margin, though, guys. 76% gross margin. This means for every extra dollar they bring in profit, it leads to 76 cents of extra profit for them.
$21.5 billion market cap, huh?
Yes.
Okay. Any dividend with this company, Cloudflare?
I'm really glad to see zero because I don't think they have the money. Their free cash flow is awful. So, income statement. Only 3 years of data, guys. So, 3 years of data. 105 million. Wow. Look at this revenue. 431. 4 times more. Incredible.
Wow.
A loss of 54 million versus a loss of 120. X there. They're losing more money.
Is that pillar number 4, net income?
Yes. They're losing more money.
So they made money, though. Oh, well, look at that. Okay.
The revenue is increasing. Their profit's decreasing. As they're growing, they're probably spending more money to grow even further.
So only 1 check so far out of 4. Let's go to shares outstanding, Paul. I would imagine they're selling off.
You are right. 251 million versus 303 million. So you are right, Seth. Seth, how'd you know that? You're learning this stuff. How'd you know that?
With 0 PE and a climbing stock price, I would imagine they want to sell shares to bolster their purses, their coin purses.
Yeah, you're right. You're exactly right.
So that's an X for pillar number 5.
I want to thank a few people. I can't thank the people who've upgraded because I don't get those emails. I'd like to thank a few people today. I'd like to thank Jacob, Daniel, Joshua, Rainier, Bika, Saif, Andrew, Smoking Man, Brian,
and of course God,
Shahan, Amit, Piotr, Ernesto, Jordan, and Glenn. Thank you guys for signing up here in the last couple hours.
Marcel was kind enough to say that Cloudflare is used by 81% of all websites that rely on content delivery networks. By the numbers, Cloudflare is easiest, the most popular CDN on the market. Hello, hello.
Wow, so that's great. Now that could be a very good company, but we have to make sure the stock price is reasonable. Balance sheet. What do you think about the balance sheet, Seth? What do you think? What would you guess?
Well, Paul, the super chats are coming in like bonkers now, so I can hardly keep up with this. Let's see, the balance sheet. This is free pillar number 7. I'm sorry, this is current assets over current liabilities.
Yes.
Again, I would hope they have more current assets and liabilities, but I'm eager to hear what they are.
I'm sure they do. 1.13 billion. Guys, current liabilities, only 130 million. Total liabilities, only 544 million.
Tell us why you love this.
Because this means they have more cash on hand than all debt. They can pay off all their debts they have. Short-term, long-term. It's like you at home having enough money in your checking account to pay off your mortgage, student loans, car payment, everything that you own, credit cards, everything you owe everybody. Your bookie, everyone. You can pay it off with the stroke of a pen. That's pretty impressive. It's hard for companies like that to go broke. Now, they are bleeding money, so they need that cash. Cash flow statement.
Pillar number 7 is free cash flow growth over the last few years.
0 cash flow over the last few years.
Uh-oh.
And it is an X because they went from negative 22 to negative 92.
So is this, obviously this is a new growing company.
Yep.
The price to free cash flow doesn't exist. What are you thinking about Cloudflare?
Again, just like all the other new companies, I want to wait for them to get stable. Just like Amazon. Someday I'll be a buyer of Amazon. Someday I'll be a buyer of Tesla. I just need them to get more reasonable in terms of price, and I will do it. What are we laughing about?
Our dear friend Giroy just paid $55 to just say, stop doing this.
Epic super chat.
Okay, so that is our take.
No, he also asked for Nokia.
Oh, did he?
Incredible.
Oh, I see.
Oh,
Nokia.
no, that was his currency. Is that his currency?
I don't know what.
That's his currency.
Okay,
Yeah.
Giroy, you know I love you.
Oh, shorts check. Susie wants a shorts check.
Well, Tim, will you help us on panning down that C200 and get Paul?
Another Fabletics new purchase.
So This is Paul in his shorts. He's been famous for. Paul, step to your left just a smidge.
He has
and
beige, black, white, gray.
I look like a foreigner today, guys. No offense to the foreigners out there.
Show us those pasty white legs, Paul. Look at that. Look at those muscles. He's been doing his deep squats. I see him
slapping his head.
I see him working hard in the gym. Those you love those
Love squats.
lunges. Okay.
Tim hates squats.
Susie is made of money. She wanted the shorts check.
Making
One of our
it
biggest
rain.
fans. She's making it rain like she's at a strip club, and she very well might be here in a moment.
Okay, so CHF. That's the next one.
CHF.
Wait a second.
Go-
I
I'm
want to
sorry.
do this net thing.
Oh, go ahead. Oh, sorry. We're going
Because-
back to Cloudflare.
Yeah, just because,
with Mo.
and the
Go
only
ahead.
reason is because it's good. Otherwise, I would let you keep going.
Go ahead.
So it's moving up through the sweet spot right now. If you get an engulfing candlestick taking out, what day is today? Thursday?
Mm-hmm.
Taking out Tuesday's high right here, we can add to this. So people put that in the Bid and Ask Nation chat. This is another one that's going to go on the watch list. This thing has potential to go to like $96 a share or something like that. Okay, I'm done.
Thank you, Mosif the Great. Okay.
Oh, it wasn't CFH is a Swiss franc. Sorry. So what's the request then? I'm sorry. That was my mistake. I read the wrong thing.
I have CHF is Chesterfield Resources from the United Kingdom, Paul.
So that's the currency.
Yeah, that's the currency.
They didn't even make a request. So Flow, I don't know if there was a request for a stock. That's a good question. I'm sorry.
Oh, okay. Flo, did Jack let us know if you wanted a stock? That was obviously a healthy give you got there. I appreciate you. Okay, we can get back to it. Paul,
I didn't realize that was a question. Listen, I get confused because it says CHF and that sounds like a ticker symbol.
right? The people
Yeah,
are laughing
and it
at us.
wasn't
How
that.
funny.
They
A
can write.
Swiss
They
franc.
write what they want right below.
Okay, here we
Okay,
go.
so wait a second. Great question by Airdrop. What do you mean by every extra dollar of revenue? So when gross margin occurs, that means for every extra unit they sell, so every extra dollar they make in revenue and that comes into the store, that comes into the business, they can add 76% cents of that to the bottom line. That's really profit. It's like every unit costs them 24 cents of direct costs to operate it. So that's a very, very healthy gross margin. Software businesses have that. Drug companies have that. Not many businesses have that. As an example, I will show you right now. Let's look at Amazon. Amazon's gross margin, big company, 24%. Right down here, 24% of their gross margin. That means for every dollar they sell extra, 24 cents goes to the bottom line. A company like Tesla, probably negative. It's not, I'm just kidding. 21%. So these are the things that when you look at the potential of a company, if a company is small and has a high gross margin, has a lot of growth potential, that's a lot of indication they can drive a lot of profit to that bottom line. I love that. So keep that in mind. That's all part of the story. And I'm really, really glad you asked that question because it's such an important question to ask about understanding what gross margin can do for a company that has a lot of growth potential. And when a company doesn't have a lot of growth potential and they may be stagnant, it shows how secure that profit might be. Because at the end of the day, if only 24% of the revenue is costs, if revenue goes up by 30%, they're still at 31% cost on their revenue. They're still going to make 69% of the bottom line.
How do you know what extra dollars are? Is that above the fixed cost? What do
No,
you
every extra dollar of revenue. Literally
revenue.
every extra dollar of revenue. Now, granted, there will be fixed costs added as time goes on, but it's literally like, so for example, if we have an apartment building with 10 units, basically all of our costs are fixed. So if we have 7 occupied units, if we lease an 8th one for $1,000 a month, 900 of that is profit. Because we're already paying all of our insurance, property taxes, all those things are set prices. We have a high fixed cost in real estate, and a lot of businesses have high fixed costs. So the gross margin is how much every individual, extra individual unit or dollar makes them in extra money.
People are saying there's an update on Plug Power. We've talked about Plug in the past. This is totally new. Mo, give us what you're finding on Plug Power over there.
So it looks like with this Plug Power, there's a law firm that's filing a class action complaint on behalf of the shareholders because of some kind of violation of securities fraud. So if I know based on their stock price today, I think they were down 11%. Yeah, 11.5%. So Seth, I don't know what's happening here, but we did. I remember we're doing this before. These are the guys that do they're the biggest charging and car thing around, except for Tesla, of course, right?
Mm-hmm.
Or do they work with Tesla? Was that it?
So
I remember when we did this, it was a good conversation.
Maybe someone can help me because I don't know. I have a Tesla and I only charge at Tesla stations. Apparently there's an adapter where I might be able to get into some of these charge point or plug Plug Power. But I'm still not sure. I only go to Tesla stations. But
I know they were, when we were doing this, I remember reading stories that they were the ones leading the charge around the United States and probably Canada and probably Europe that were like the go-to for these charging stations. So they might be in some trouble. I don't know.
We have definitely, folks, if you're staying tuned, obviously we're live now, but we have a recorded video coming out. We just addressed our thoughts on Coinbase, the IPO that launched, where it's headed, its price, our thoughts on the price, and what the CEO said about the company. It's rather incredible and revealing. So, Paul, are you ready for the stock of which we don't talk about?
Wasn't there one after?
No, there wasn't. I mean, no, we're ready for it.
Okay, so Tattooed Chef.
This is Tattooed Chef. Now, we have a funny story about Tattooed Chef. This company is so new that the data we've tried. We did a video on Tattooed Chef in December. It didn't go well because our data was flawed and people are saying you guys are idiots. We redid the video using updated data, which was still flawed. And these are actually the only two videos we've ever pulled down from our site that we really just did not have a correct input information on. So we'll give it a try right now. We appreciate the super chat donation. And so, Paul, are you ready?
So here's the deal.
Go ahead.
I'm on Tattooed Chef's website. Guys, if you look, I went to financials and clicked annual reports. There are no annual reports here, guys.
Ooh.
That is why we were having a hard time. Morningstar doesn't get their data. I don't know where the annual reports are. To me, that should be an indication of concern. I even Google searched it, and I found, let's see, full year 2020 financial results. Okay, we got this. Where's full year? So I'm gonna look at full year here. Revenue, so financial highlights for the year 2020. Revenue was 148.5 million, which is a 75% increase. Net income was 45.4 million versus 5.6 million. So they made money. What's the value of the company right now? What's the market cap?
Well, you're asking me.
Of Tattooed Chef?
Yeah.
What is it, TTFC?
TTCF? Nope, TTFC? No, TTCF.
So
1.48 billion.
Yep, 1.4.
1.5 billion.
Yeah,
1.5 billion?
Yeah.
So right now they're selling for about 30 times profit. That's actually not as bad as I thought. 30 times PE. Guys, there's not enough data here for me to care. So for me to look further. 30 times PE isn't bad. The question you have to ask yourself is, how much more growth potential does the company have? This is pretty, I mean, I don't know what they do, guys. I'm not an expert on Tattooed Chef. But if you think this thing is going to the moon, it looks like they have a healthy profit margin.
Wait a minute now.
Wait a second, what's this branded product? Oh no, wait a second. Their revenue, Tattooed Chef branded product revenue was a record 84.6. What are you gonna say? Wait up now.
Well, I think the key with this stock is while it was going to the moon when we talked about it, we tried to cover this before in the December where it was around $14. Then it shot up to upwards of $25, $26, $27, and it's now back down. This has been a very hype stock on a lot of other channels. It's now back down. Is it coming back down to earth at $18, Paul?
What was it when we looked at it?
$27, down to 18 now.
Okay.
If the numbers are looking better, and you can take into account the potential growth, are you still not touching this as a value investor?
This is what I'd like to do a stock analyzer. But remember, guys, I like investing in smaller businesses, in more established businesses. If you believe in this company and you believe the growth potential is huge, you need to sit there and go in Excel and put in some kind of a sheet your estimations of profit for the next 5, 6, 7 years and see what you'd pay for that today. This is a very, very hard company to do because of the lack of history. My investing style is to look for more established cash flow. Now, I will say this, 30 times earnings, 30 times PE for a company that could grow that much doesn't seem too bad to me. I never thought I'd say that, but doesn't seem too bad to me. If they really did make this money, now I'm going off their website, which I'm sure is accurate, or else the SEC would be on them. But I'm looking at this saying, let's see here.
Mo or Paul, how about the belief? I'll tell you what, Beyond Meat was something that was just a hype stock.
Yeah.
I had a Beyond Meat burger. I grilled that thing up, baby. I literally said, Mo, I could eat this the rest of my life. I don't have to have beef. This tastes amazing. My kids open it up. It smells like a manure.
Yeah.
Then I grilled it. It tastes amazing.
Oh, by the way, you know what? Go ahead.
Paul and I went and got the Impossible Burger, which is different than Beyond Meat, which we found out. But
Yes.
it was delicious. I mean, I compared it to the Whopper. It was good.
That's what I thought too. So what are you finding, Paul?
So I'm looking at, but wait a second. This is totally,
Is this 10K for?
this is a 10K for Tattooed Chef.
Chef.
And here it says their net income was 68 million last year. But it said the other one said 48 million. What was that? Look at this. What? Look at it. Can everybody, this is why I get confused. Financial highlights for the year 2020 compared to 2019. Net income was 45.4 million, right? I'm not delusional in reading that, right?
That's what it says.
Right?
Was
Yeah, you're right.
Compared
I'm on
to,
the 10K right here.
come on.
Here's the 10K. Net income, 2020.
$68 million.
Yeah.
This is our problem last time, folks. Everyone, listen. Apparently,
I'm just showing you what's on the internet on Tattooed Chef's website.
This is the
and the
information that they
SEC
give us.
document. This is what they give to people.
Yep.
so there's another huge there's another huge YouTuber, almost a million subscribers, and he worships this. I love this
By the way,
guy.
can I make a comment?
And he worships Tattooed Chef. Go ahead.
The 2019 number is right. 5.6 million here, and look at the SEC filing. 5.6 million. But the December 2020 result has changed. When did they report?
Yeah. While you're looking at this, we're talking about another stock going to the moon. Think about how many times we've said that these different stocks are going to go to the moon. Isn't that crazy to think about? Can't we just have normal stocks that don't go to the moon and just
By the way,
grow?
Warren Buffett made hundreds of billions of dollars with not one stock going to the moon.
Exactly. It's like
Every
why
great
does everything
investor,
why
you
does
don't
everything
need
just
to
have
go
to
to the moon.
moon?
You just need to limit your downside losses. That is the goal of investing.
Yeah, someone's saying on
dawned on me
Webull,
right now.
on Webull it says it was 68 million as well as the revenue.
Oh,
for last
okay.
year.
So maybe they restated. But the question is, why on their own website do they have the lower number on there?
It sounds good.
No, it's not good. Their
They have
website
the lower
says 45
number.
million.
I see.
So this is the issue I have, guys. This is going to happen a lot with our software where new companies that are reporting, some companies report late. It's just an issue. Report it, but usually 9 times out of 10, we just get a data feed. All we're doing is our computers are pulling the data from someplace else. So the only reason to tell us there's a data error is we can go to our data provider and say, guys, look, you haven't sent us this data or the data is an error. And by the way, I have white charts. I paid $500 a month for white charts. And guess what? I find errors. So it's going to happen. Just be patient about that.
So what we're trying to tell you,
Seth is drinking a beer on the show.
what we're trying to tell you guys is this, and this is like the summation of the whole show. Is Paul has taught me over the past 2 years is you don't actually need your stocks to go to the moon to retire with an amazing amount of money, have a great life, and leave an amazing amount of money to your kids. Can you double down on that, Paul, and explain that? Because this was very eye-opening to me.
Whenever people talk about investing, they think about what's the potential. I'm a big believer in if you're a astute investor, the potential will take care of itself. Your goal is to limit downside risk. What is risk? This is where I differ from a lot of people. A lot of people see a stock and they see this and they go, that's risk. No, that's volatility. This is volatility. This is what I consider risk to be. Risk to me is what's the value of the company, in my opinion. If this is the value, that's called intrinsic value. This is more risk than this. Because risk is the chance of losing capital loss. When you pay less for the company than it's worth, you have less of a chance of losing money than when you pay more for a company than it's worth. That is all risk is. You can sugarcoat it any way you want. I've been on panels before where billionaires will sit there and argue with me about it, but they're wrong. I always say to them, so you're telling me if I bought this iPhone for $1 versus 10,000, I have the same risk at $1 as 10,000. Doesn't make any sense. Even the price of this thing fluctuates from 500 to 2,000 all the time. It doesn't make any sense. Risk is purely what you pay for something. Now, when you're investing, your goal should be, how do I limit my loss? Well, how do you limit your loss potential? This is loss potential. This is not. You limit your loss potential by paying less for an asset than you think it's worth. Okay, that's it. And every great value investor in time, if you do these things and limit how much you overpay for things, you will do very well over long periods of time. You will beat the market, which is more than most money managers will ever do. So focus on buying best value at a cheaper price and you will do very, very well. You don't need home runs. Warren Buffett didn't have stocks that went up 100 times. All he had was good foundational companies that spit off cash flow that he used that cash flow to go buy more stocks. That's it, guys.
If you're interested in trading Tattoo Chef, we will head over to our Egyptian warlord goddess, the handsomest man
King Tut.
on that side of the
Should we
room.
call him King Mo?
Mosef the Great.
Yeah, Mosefine.
In trading Tattoo
Mosef
Chef.
the
Go ahead,
Great.
Mosef.
So we've kind of missed the rundown. We moved through the sweet spot. This was a great short. I'm sure somebody, at least one person in the Bid and Ask Nation caught it. But now we're in that oversold area. So what I would do with this, if you want to do something, and I do think that this is one of those hype stocks, so you can capitalize on the upside, warranted or not, doesn't matter for our purposes. Just throw it on your watch list and just let this thing go sideways for a while. Eventually it's going to spike up and you will get green candlesticks. I should probably use yellow. Green candlesticks going up like this. And you probably can make a run back to the mid 20s. But for right now, chill out, put it on the watch list. It might be something good for you. I like that it has that volatility and hype behind it, which can maybe give you some quick gains.
That is our take on Tattooed Chef. If the numbers can get straight, I think Paul might be interested. So we will move forward. But
By the way, they probably revised at some point, but it's just weird to me why they didn't revise their actual website. That's just odd to me. And by the way, how did the revision go from 45 million to 68 million? That's a big jump. That's a 50% jump, guys. Literally a 50% jump.
Flo to Jack has given money twice. He would like to look at TRUP. The ticker symbol is TRUP. This is Trepanion. Trepanion is a pet insurance provider. Paul, do you have insurance on those dogs?
You know what? I don't, and I regret that. I actually think I should have gotten pet insurance.
It's a pet insurance provider.
I've heard a lot of things about pet insurance being scammed.
I've heard a lot of things about people that get pet insurance and it's no good.
They're based in Seattle, Washington. They offer a cat and dog insurance, and it's a pet insurance company. I mean, okay. The stock price upwards at the beginning of the year, Paul, was up over $115, $118, $123. It's now down to $80. And their market cap on my end shows about 3.1 billion. But what does the Everything Money
today?
software?
4%.
Okay.
Okay, I'm showing a $2.9 billion market cap. Close enough. 4% would be about 120. Yeah, it makes sense. Okay. So their profit, they lost money last year. So they have a negative PE and a negative profit margin. And here's another thing. Talk about gross margin. Their gross margin is only 16.3%. Now, insurance company guys, this is the issue with insurance companies. Insurance companies make money in a totally different way. I usually don't like going through insurance companies for this exact reason. I don't know how much pet insurance differs, but the goal of an insurance company is to take your money today, reinvest it, and make money along the way until they pay it out to you. And that is the goal of an insurance company. So how you look at it is totally different than looking at cash in and cash out, okay? Let's still look at it, even though I probably shouldn't, but we'll look at it. Look at this revenue growth, guys. 84 million to 500 million last year. So it was 188 5 years ago to 500 million. That's incredible. That's absolutely incredible.
Paul, I missed their profit margin, which is pillar number
Negative,
two.
because they lost
Negative.
money.
Okay, so 2X's and great revenue, of course. Yeah. I'm assuming their profit is good as well, pillar number 4.
But you know what they hate? They hate making money. These people are allergic to making money. They have not made money in the last 8 years. Not 1 year they made money. So my question to you, I'm not going to stop the analysis right now, but their shares outstanding, 29 million to 38 million, X. Let's see if they have free cash flow, though.
Did you 29 to 39 million?
29 to 30 something million.
Oh, I was gonna, that's huge.
Well, it might be 29. Wait a second, it might be. Yeah, to 38 million. 29 to 38 million.
So that's an enormous increase in shares.
They have plenty of cash on hand. Cash on hand, 218 million. Total liabilities, 172 million.
This is pillar number 6, Paul.
Yep. Now cash flow, guys.
Free cash flow, pillar number 7. I'm going to slow you down a smidge, Paul.
Okay, their free cash flow. Remember, in the Everything Money app, I added 2 sections. Sorry, I added 1 section, 2 pieces of data. This is not actually in the cash flow investing section of a financial statement. I added it myself just so it would make it easier for you. The 5-year average is negative, but they had one big loss that year. So negative 1.7 to 15.8 check mark. So currently the company is a $3 billion company.
Yep, $3 billion.
With $15 million in free cash flow. That's 200 times.
$15 million?
Yes.
You make that in a couple quarters, 1 quarter,
maybe 3 weeks.
I mean, good Lord. Okay.
So guys, this is expensive. They have free cash flow too. This year was a big bad year for free cash flow. I wouldn't strike that out. But look at the previous years: negative, 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 negative. Finally went positive, big negative, positive, positive. So they got a lot of growth to do, but they're also selling for a huge premium. I can understand paying 20, 30% more for a company for growth, 40% more, but to pay 5, 6, 7, 8, 9, 10 times more in order to get it, I just have a hard time with it. That's just my opinion. Do they have a lot of growth? They've grown like crazy, which is awesome. They've almost tripled in the last 5 years, which is great from 2016 to 20. I have a hard time.
Let's head over to that dreamboat, Mo. I saw Mo somewhat shirtless working out, and he is more shredded than I ever thought. Mo, you were ripped underneath that shirt. Congratulations.
I try.
Let's talk about what company. I just lost my train of thought. What company we talking? Trepanion. Give us the trading on TURP.
So I don't know what happened over during COVID, but man, look at this trajectory that this thing went on during COVID. So now it's coming back down, but we are starting to see that little bit of an upswing, as you can see. So it's oversold. Let us just throw this on a watch list. Same thing. Make sure this red line gets moving up towards the sweet spot. And if this thing does start going, I mean, you'll face a little resistance here and here at $100 or so. But maybe we'll test those highs again, be able to make some money on it. This is another one that I probably would end up putting on my watch list. It's low on the watch list, but it's on there for sure.
Thanks, Richard, for your donation and paying for my beer. I love you. I love you, Richard.
Can we refund people money?
Yeah,
I feel bad about Corsair Gaming.
I was looking into that.
Yeah, Mohammed, I appreciate you doing that. There's not enough data. Our data feed isn't even providing me with enough data to go through it. So I'd like to refund Mohammed his 35 pounds or whatever that is.
Mohammed, we can owe you one here if you want to get another one in.
Our Everything Money channel.
This is new to us, folks, so certainly don't look at me for an answer. Paul, I think I probably just gave the patrons another meme of me looking like an idiot when you asked me questions, and I'm just like, okay. But yeah, so Paul, what about Main Street Capital? Dante paid some cheddar to see Main Street Capital. Mo, do you know what this is?
What's the ticker?
I've heard their name before, but
Well, Capital could be a lender.
Yeah, or it could be some kind
Main Street Capital is a capital market company. The ticker symbol is Main.
Main Street Capital Corporation.
Founded in 2007 out of Houston, Texas. Got some data here, Paul.
What do they do?
Unfortunately.
Ooh, look at that big fall in last year.
Oh, yeah.
They've been around for a while.
The ticker symbol is Main.
Big PE.
Private equity firm that specializes in equity capital to lower middle markets. Okay. Acquisitions, management, buyouts, growth finances, recapitalizations, and refinancing.
What do you think, Paul?
I mean, let's go through it. I just don't, again, and by the way, thank you, D Rose. I hope that's, it is not Derek Rose, but thank you for joining our Patreon. And I'm sure a billion other people have signed up for Mo's Patreon group. Crazy.
Okay, so this is Main Street Capital Corporation. Ticker symbol is MAIN, Main.
Okay.
And they suffered. Sorry, Paul. They suffered an enormous drop last year during COVID. Their stock price was upwards of $44. Went all the way down. Good Lord, look at that! All the way down to $17, as if it could never happen. Now it's back up to 42. Go ahead, Paul. I'm sorry to cut you off.
2.8 billion. Profit 29 million. PE of 94. Profit margin of 50%. So X check.
So their PE is an X, but look at that profit margin of 50%. That is a check. Pillar number 3 is revenue growth.
Revenue growth. Oh boy. X. 172 million down to 58 million.
58 million bucks?
Yeah. Net income 138 down to 30.
This is profit growth?
Yeah.
30 million.
It's X. It's an X. Shares outstanding, okay. X.
Pillar
so guys,
number 5, shares outstanding.
Not only are their revenue and profit going down, their shares are going up. So not only are you getting less, they're also issuing more shares to give you less of the less. Yes, exactly. It's like, okay.
Okay.
Balance sheet.
This is current assets over current liabilities.
27 million. So this is a lending company. They probably have a lot of liabilities. It's an X on... I don't think we even have all the data on this company. Is the data even coming all the way through? Let's go to the cash flow state. It's an X on the current assets, but let's look at the cash flow. Guys, I'm looking at cash from operations here being negative. And the big thing I want to point out here is, look at the dividends. How are they issuing these dividends?
Maine is required to pay 90% of its profit as dividends.
Great. And I'm always wondering they paid $157 million. There's got to be something wrong with my data feed. Because there's no way that's the case.
Yep.
There's no way that's the case.
Adam's saying they have to pay out 90%.
Yeah, but there's no profit to pay out.
Other people are asking, how are they paying? That's right. How are they paying this dividend?
Watch it be. Nope, it's right. It's the same as the Y charts.
They're not a REIT, people are asking, right?
Is an investment firm engaging? No, the data's right. Y charts is the same data.
All righty.
Guys, I don't know how they're paying. I mean, what profit? I don't get it. I don't know what to say. So, guys, I would avoid it. That's just my take. I don't look at it going, hey, find a company that makes a product and has something you can understand, and you can understand their cash flow. I don't understand this cash flow. Revenue's down a lot, profit's down a lot. No, by the way, they're issuing more shares, and they have a ton of debt.
But David's saying they are a business development corporation. That doesn't mean anything to like a normal person like myself. Does it use to you smart guys? Does it mean anything, Mo?
Trying to develop businesses.
Tim, make sure we don't publish this video because we might look like idiots if we're missing something huge on this one. But of course, Paul, we're only looking for those 20 to 30 amazing companies.
So one of the things I do, guys, is
go ahead.
The second I don't understand something and it's a red flag to me, strike it out. Like if I was looking at this company, I'd immediately be like, we're done. Go find another company. Mm-hmm. Don't waste your time on. It's just like if you go on dates. When you go on dates when you're looking to get married, you don't sit there and go, let me go out with 1,000 people. And sorry. Yes, you do. You sit there and say, let me first screen by saying, if somebody wants to set you up, tell me about them. Well, they have a heroin addiction. They've been arrested 4 times for attempted murder. You're not going to be like, no, maybe they're just misunderstood. You're like, I'm out. Get rid of it. Same thing.
People are saying that these BDCs do have special rules like REITs involving payouts and whatnot.
Well, I'm sure they do, but if 90% of the profit was $30 million, they paid out $166 million. 90% of $30 million is $27 million, not $166.
Of course, David is helping us with the BDC is a company that lends money to other companies as a business model. It's a pyramid scheme, apparently. I'm kidding. And they have the same dividend payout requirements as a REIT. Okay.
And by the way, you are right. Trader Mo does go on 1,000 dates. Wait, is Nicole watching? That's awkward.
No, Nicole's coming to the live stream tomorrow.
Oh, that's right. Patreon live stream tomorrow.
Oh, yeah, Patreon live stream.
6 p.m.
Fireside chat.
Fireside
We're doing
chat.
so much content.
It could be our last one. No, I'm going to say there's going to be one more in this house, and then it'll go to the new house.
You think?
So tomorrow at 6 p.m., patrons, you know what's happening. 6 p.m. Eastern is the Patreon only. We get to curse like sailors finally because it is a Patreon exclusive live stream that doesn't go out to anyone else. So you'll be hearing me let loose tomorrow, and this will be great. And of course, Susie is making it rain again with the free poncho.
She made a lot of money on this Amgen trade, clearly.
Yes, she's just blowing it all on free poncho, politicizing
everything dating. We should have a dating website just for value investors.
Sounds boring already. Okay.
So, anyways, guys, I know I want you guys to focus on the fact that I'm trying to teach a process that is good at eliminating things very quickly. Does that mean you're going to miss out on opportunities? 1,000% you will. But your goal is to find a 20 or 30 that makes sense to you, that you can understand fully and say, this is why I own these 20 or 30 companies. Because all your friends out there who have a mutual fund, they can't tell you any reason why the mutual fund holds them besides, oh, it's a cute company. It's doing great. I like baseball.
Okay, guys, that was our take on whatever the hell company that was that we're not buying. Okay, we're getting back to Muhammad. I think he found a company. He gave us some money, Paul, and a donation, of course, and he wants us to look at a new company. Would you like to look at it?
Let's hear it. What is it?
The ticker symbol is KTOS.
Okay.
KTOS. This is Kratos Defense and Security Solutions. It's headquartered in San Diego, which is it's Algonquin for the good land.
If anybody can tell us what Algonquin for the good land really is, in the chat right now.
Paul will cut you a check for
$10.
It's from San Diego.
No, I can't tell because I can do the internet. It's Milwaukee. It's from the movie Wayne's World. Milwaukee, which is Algonquin for
but
the good land.
I kind of mixed two movies because San Diego is from Anchorman,
correct,
which is German for whales. Anyway, they specialize in directed energy weapons, unmanned systems, satellite communications. I'm certain they're working with Space Force, Paul. You know that's happening. Cybersecurity warfare. What, Paul?
Let's go.
Oh, you're throwing your hands up.
Let's do this. You spent too much time talking about like how cute this stuff is. I'm like, let's just get to it.
Kratos
not the foreplay.
Defense. Go. I know you don't like foreplay. Go ahead.
I love it, actually.
You do?
Yeah. 3.5 billion.
Like how much of it? How many minutes?
65 to 70 minutes.
Come on.
Well, I mean, you're married. It's a different story.
Are you talking? You cuddle around for an hour?
Cuddle?
You cuddle that much?
I really enjoy it.
What are your thoughts right now, Tim?
An hour? An hour?
Maybe more.
Mo, are you hearing?
Maybe more.
I absolutely love that Tim sits right here.
I thought Tim wasn't listening to it. I'm like, oh, this is good.
Right
I thought you were. I'm crying. I thought you were joking. An hour of
a long
back
time.
and forth. Who's got time for this?
What are you doing?
Do women have time for this? They're not checking their phones or worried about
I mean, I know they can be there, they can not be there. It doesn't matter to me as long as
an hour. Beth, I hope you're listening. Listen to this guy. Okay. An hour of foreplay.
maybe more. I don't know.
Wow.
I'm
Okay.
actually slightly embarrassed right now. Isn't that funny?
I'm getting out of my mind. Beth says she wants 70 minutes. I better get on the treadmill and start working out. Okay, let's get back to Kratos Defense. Like I give a crap. Okay, Kratos Defense, Paul. Let's talk about this on the Everything Money software.
So 3.5 billion, 80 million in income, PE of 43. That's an X. Profit margin barely above 10%, but that's a check mark. Now, one thing I want to point out.
Check mark.
Their free cash flow was a negative 11.2 million, but their profit was a positive 80 million. That's always a red flag for me. Whenever free cash flow and profit are very different in either direction. I want to understand, how can they be this different, right? Now, a defense firm, they're doing defense work. Maybe it's the timing of payments, but this is very, very important for you to understand how that is happening, because you want to understand, how are you getting your money back out of this company? How are they going to make their balance sheet better? That's super important. But these are the things that I put on the first page for that reason. All right? So let's go to the income statement.
Okay. I'm still distracted by your cuddle talk.
Do you want to cuddle later?
With you?
Not cuddling. It's not even stuff.
We embrace.
542 million to 747. Check mark there.
Okay, check mark for revenue growth. How about profit growth? Can you make that screen a little bit bigger so we can read it?
No, I cannot.
Profit growth over the past 5 years, Paul?
Negative 60 to a positive 80. Check mark.
Oh,
Well, guys, look at this. I automatically don't like this. Look at this. Negative 24. Negative 114. Negative 37. Negative 78. 20. Negative 60. Negative 42. Negative 3.5. They've only had 3 years in the last 10 that they made money. So my question is, what's the interest in this company? Have they hit a new stride? Are they on a new page in their life where they can get a lot better? I don't know. I'm just looking at saying that automatically is a red flag to me. If we can't rely on their earnings, what are you going to do? Oh, shares outstanding? Jesus H. Christ. What are you laughing about, Mosif?
Susie.
What'd she say?
She's giving money to let us know how long she wants to. She's the best. This is pillar number 5.
Can you look at this
shares
one?
Outstanding. This better be low, Paul.
65 million to 123 million. This is absurd. Yeah, so let's recap. They've lost money in 7 of the last 10 years. Their profit last year was 80 million, but their free cash flow was negative. And they've issued almost double the shares. Not a stock split. They have issued almost double their shares on the company. Let's go to the next one.
We're sorry to say that there's not much more to look at. Mo, are people trading this stock? You don't.
Yeah, so I mean, oh my goodness, it's consolidating right now, and consolidating means it's just going sideways, just stuck in a range. So if you want to do something here, you certainly can. It's coming through the sweet spot pretty nicely. I want this red line to be a little bit steeper. It's just going too sideways for me, which means that this is just going to continue to go sideways like that. There's better options out there. That's all I have to say about that one. There's 10,000 other stocks. We just found 3 more other than this today. That's how I go through my filtering process. Same as Paul does with the value side. If I see something that I'm just not too excited about, on to the next.
Beaker asked me, are you going to go to the whole show without talking about Kathy, your queen? I got to give Kathy 3 hours of foreplay.
Kathy Woods?
Yeah, Kathy would.
Okay.
I'm just kidding. I would not. I would not. Ha.
Okay. Cameron.
Have you ever seen the Bill Gates dab? Have you ever seen that?
Probably.
It's like this. I mean, it's like the most awkward dab in the world. You got to look it up, everyone.
Okay. Cameron is looking for the next company we're going to cover.
Can I make a comment? After Dimitri, we should stop super chats. We're not going to do any more stocks after Dimitri.
I was going to say my pulse is all this heated talk about engulfing candlesticks is really getting me cooking.
What's the stock I'm looking at?
Jazz is the ticker symbol.
Jazz is. I looked at Jazz yesterday. I got an email from somebody about Jazz. I was actually pretty impressed. So look at this.
This is. Hold on, Paul. You got to just let the foreplay happen here.
I just realized that I texted our fathers yesterday about Jazz, and neither of them responded to me.
Jazz.
My dad doesn't love me. So.
Jazz Pharmaceuticals is
clearly the same
biopharmaceutical company based in Ireland. It was founded in 2003. One of the company's most significant products is the United States Food and Drug Administration approved drug. What drug is this, Mo? Xyrem, the sodium salt of a naturally occurring neurotransmitter, hydroxybutyric acid. Like anyone knows what we're talking about besides me. Jazz Pharmaceuticals. Paul, let's pull up Jazz Pharmaceuticals in the beautiful Everything Money software. If you're done swiping right, please come back to the show, Paul.
I am texting a female.
Okay. What is the market cap for
but not
Jazz,
a female.
baby? Jazz.
Friend.
Go ahead.
Okay, $9 billion market cap.
Mm-hmm.
$238 million in revenue, in profit, I mean. 37.8 X mark on the PE, 10.1% profit margin. But look at that free cash flow last year. 455 million versus 238 net income. So I want to see why there's a big difference here.
Okay, pillar number 1, PE is over 20. That's an X. Pillar number 2 is profit margin over 10, which is a check. Pillar number 3 is revenue growth over the past 5 years for Jazz Pharmaceutical. The ticker symbol is just Jazz.
1.49 billion to 2.36.
Oh, hold on a minute. Jazz is a magic formula list stock. I love it. And a little book stock. I love this. Let's keep going. Revenue growth is growing, Paul. I missed it.
Profit growth is an X. 397 down to 238. That's an X. However, look up here just a few lines above, would you? Other income and expenses. You see what happened last year?
Tell us.
$390 million write-off or some sort of charge, and that's what causes drop. Because in other years, it was less than $100 million every single time. So there was some big reasons. So guess what I care about PE? I don't. So for all of you out there who think I'm just about the PE, I'm showing you right here. All I want to find out is, what's this 390? So you guys in the chat out there, please find out, what was their $390 million write-off in 2020? Number of shares outstanding.
You make it a little bit bigger.
No, I cannot make it bigger.
Oh, you can't. Sorry.
No.
All right, go ahead. This is shares outstanding is pillar number 5.
Check mark. 59.92 down to 55.94. I should say this. I can make it bigger, but I think it'll really make the lines way too tight.
Okay.
See?
Oh, I see. Okay.
Yeah.
Okay, great.
So check mark for shares outstanding.
Check, please.
Balance sheet. You ready for this, Seth?
Current assets over current liabilities is pillar number 6.
2.56 billion versus 642 million. And their total debt, they don't have enough to pay off their total debt, but they don't have much more. They have only 2.9 billion in total debt. Yep. So far, guys, this is great.
So for everyone saying we never find stocks, this is looking tantalizing already. Free cash flow growth is pillar number 7.
The average over the last 5 years, 548. The growth, 345 to 455, check mark. And 548, what's the market cap?
Check, please.
Market cap is 9 billion, Paul.
Divided by 0.55 equals, what's 9 billion? What's 9 divided by 0.55?
It's 16.36.
That's a check mark. It's less than 20.
Oh, baby.
I'm going to tell you something right now. If you do your research on Jazz and you like their pharmaceuticals, their pipeline, I would buy it. That's why we texted our fathers about it. That's why Mo texted our fathers about it, because I like the numbers. I like the way it's going. If they have a good pipeline and their drugs are good with long-term patent protection, I'm going to buy it.
I got an 11-year-old at home that's going to love to look at Jazz. He loves when they fall into the sweet spot, as Mo would always say. Talking of sweet spots, let's head over to Mo and trading Jazz Pharmaceuticals. Give it to me, baby.
So it's coming down through the sweet spot. So technically it's a short right now. I do not think I would short this though, because there's better options out there. If you guys look over the last 3 or 4 months, it's just kind of just stuck in this range, not doing anything. Eventually, I do think that this thing will swing up. The red line will swing up and go towards the top side, making these engulfing candlesticks breaking out over its previous high. So yeah, I mean, another watch list. And this is a weird one that I want to put on the watch list because it's in a downtrend. But I think with all these sweet spot reversals that it's having up and down, it will eventually go positive, especially with what he just said. So
Don't we owe QSR for Dimitri?
What's that?
QSR for Dimitri?
I didn't see it.
Yeah, QSR. Dimitri wants, that's why I said after Dimitri, we're done.
Okay, sorry about that, Paul. Okay, so that is our take on Jazz Pharmaceuticals. It's a little book stock. It's a magic formula stock, and it seems very intriguing. Paul, you don't say that often. If you like this, it's a buy. I do like that. Okay.
All right, so QSR.
Next stock.
Last stock, guys. Don't give any more money as much as we like to give to
stock.
Restaurant Brands International. Okay, these guys have to have a portfolio of restaurants. What are they?
Restaurant Brands International is a Canadian American multinational fast food holding company.
They own Burger King?
The ticker symbol is QSR.
QSR. What do they own?
They own Burger King, Tim Hortons, Popeyes. They own, let's see.
Tim Hortons.
Yeah, that's the big ones. That is
all right,
the big
ready?
ones. Go ahead, Paul.
$20 billion market cap. 42 PE, that's an X, 9.78 profit margin, that's a check. Now, again, 486 million in profit, $1 billion in free cash flow. Huge difference in free cash flow and profit. Let's find out why that is. Dividend yield of 634 million. So this is one of the first ones that's paying a dividend that we've seen.
What is their percentage? 3.1% dividend?
Yep, 3.1% dividend yield.
That's nice, right?
Yep.
Okay, revenue growth over the past 5 years.
4.15 to 4.97, check mark. One of the things I want you guys to do, though, when you're looking at these restaurant brands, how many are because of new stores they're putting up versus same stores? You want to make sure same store sales are still going up with the economy and growing that way. You want to make sure they're not only getting growth by opening stores, like the Borders model. When Borders back in the day, the original business model for Borders bookstore was like 250 stores. And then when they went public, everybody's like, we need more stores. And that was the downfall of the company and also technology. So don't just rely on growth here. For these locations, when it's ever a retail location, food, stores, make sure same store sales are still going up, okay?
Profit growth is pillar number 4.
616, sorry, to 486. That's an X.
Uh-oh.
So we want to find out why that is. Was there any write-offs, other income? Oh, big write-off here. $254 million.
What's a write-off again? What is that?
Well, they just wrote something. I think they just wrote something. They either sold the division that was a loss, or they wrote something off an investment they had, or a fixed asset that they impaired. They took a value of something they had on their books for X amount of dollars and said, you know what? We were wrong. It's worth way less. We're going to charge it off as a loss.
Make sure you guys are tickling that thumbs up. Just fondle the thumbs up as you're fondling Paul's butt side. Okay. Shares outstanding is pillar number 5, Paul.
Shares outstanding. We have 234 million to 305 million. Big fat X. Gosh darn it, people. Why do they do this?
The sell-offs.
Balance sheet.
Current assets over current liabilities. Thank you, Ziri, for signing up for Patreon. I love you, Ziri. Go ahead, Paul.
2.68 versus 1.62. Check mark there.
Oh, that's pretty good.
Check, please.
Yeah. Now the cash flow. Ready, guys?
Cash flow growth is pillar number 7.
1.12 to 1 billion. Check mark there. Now, I'm willing to bet because they have a lot of locations. They probably own locations, therefore they have depreciation. I'm more focused on cash flow here in this company. What was the market cap of the company?
30 bill.
Was it 30 billion? I don't think it was it?
I'm on Google at the moment. 31 billion with a 3.1% dividend.
Oh, is it? Wait, no. Oh, then I don't have. Let's see. QSR.
Yeah, QSR. Maybe am I wrong?
No, it's 20 billion, bro.
I'm sorry about that. Wait.
So 20 billion, and their average. Oh, whoops. And their average over the last 5 years.
I'm sorry, Paul. Before we mess this up, you have 20 billion. I'm looking at Google.
I have it on white charts. It's 20 billion.
Okay,
also.
sorry. Google says QSR, the market cap is 31 billion. That's drastically different.
White charts even says 20 billion.
20 billion is the market cap for restaurant brands. Okay, keep going, Paul. Sorry about that.
That's okay, but it just goes to show you. White charts and I get data from Morningstar. Google gets data from somewhere else, and the Google data is very different. So it just shows you that there are going to be errors. Google has an error or Morningstar has an error. One of these big companies has a big error.
Yeah, Rutu says 20 billion on Yahoo as well. Okay.
So somebody has an error.
Sorry
and
about
if it's
that.
Google, but I want everybody to see that as a good thing. Like, hey, Google has errors too, guys. So we're all going to have errors. That's why I'm glad we double check.
What is the free cash flow for this company?
So the free cash flow average is 1.16 billion.
Uh-oh.
So it is less than 20. So it's a check mark.
Hey.
And the growth is not happening. It's an X on growth. It went from 1.12 to 1.07.
Oh.
Guys, there's not a lot of growth in this company. I don't know if I'm paying 20 times free cash flow for
Now,
it.
this is important. Let me slow you down. People ask, so many questions, Paul. I'm sure you see them. Where do you come up with this 20 multiple? What is this 20 multiple? How does this change? You were looking at Alibaba yesterday, giving it a 20 multiple, and people were blasting you because it's a quote unquote growth company. So for this,
I thought 20 was good for a growth company.
You said that you would extend that multiple.
I did say that, but I'm not sitting there saying it like I said it for Alibaba, but I'm not looking at like 20 is bad. It's funny to me that people think 20 is bad.
Oh no, they meant that it should easily be 30 is the multiple here. But for this company, which is
That's
not
all
growing,
subjective.
you're probably looking to pay less than that 20 multiple, right?
Correct. Now look at this. This is the 8 pillars page. There's only 3 check marks out of 8. I mean, guys, what I would pay for this company right here, I want to see the same store sales. If the same store sales are growing 2 to 3% a year, which I don't think they are, but if they are, they're paying a good, I mean, I would sit there and say 12 to 15 times free cash flow. So 12 to 15 billion. So the stock needs to drop. Oh, and by the way, they're issuing more shares. They got to stop issuing those shares. They got to stop issuing those shares. That to me is a deal breaker. They issue too many shares, the company could double. And if they keep increasing shares like they have been, you're not going to make double your money.
Do you guys ever utilize the PEG ratio when evaluating high growth companies? This is not high growth, but keep going.
Yeah, I mean, any growth company, you can do PEG. I understand the idea behind it, and it's a metric to look at, but I don't focus a lot on it. I like to do the actual model and see what the cash flows will actually bring me, but it is a good thing to keep your eye on. I don't think any one metric is the be all and end all. That's why we have 8 pillars. It's kind of like, what do these tell us? And I think PEG, the price to earnings growth ratio, is something to look at.
Okay. Are you tired yet?
I am. My throat's hurting. I work out in an hour. Guys, today's a great day. You're all getting the email within the next 30 to 45 minutes.
Seth, you want to do this real quick? Then we're done.
Please do. Please do, Mo.
So
I forgot about you.
I mean, it's trending up right now. It's up into that overbought area, but it's one of these 50% stocks. And you can see that it just can't break over that. And this has been going on for a year. So right now, don't touch it. The likelihood of you breaking out into this overhang area is not very good. So that's it.
We thank you all for watching. Paul, you'd be shocked to see, someone said we hit 445 watchers.
Whoa.
Concurrent. I'm certain that Patreon is blowing up. And as much as I'd like to thank you, obviously you guys should be thanking yourselves for making a decision for better. We do not have the most popular YouTube channel because we're not, again, we went over a ton of stocks and we found a couple potential buys and a bunch of get the heck out of here. So we appreciate you guys following us. Those patrons, I love you. We will see you tomorrow. Quinn, give me my outro music, baby. We'll see you tomorrow, patrons, at 6 p.m. You're getting your email here in the next half hour to 45 to get you in on that software. We'd love to. There's going to be bugs. Stay patient. Paul, your final thoughts as the music takes you out.
Thank you so much. It's been 6 months. It's been awesome. And this is just the start of the software. I hope 10 years from now, you guys are all still using it. 20 years from now, what if we become the next Morningstar? And I really believe that. Like, what if we became the next Morningstar started because the guy was like, I need to provide data.
Morningstar, Whitecharts, Yahoo Finance, MarketWatch. We want to become all of those built into one. Thank you guys very much.
Mo in the morning at 9 a.m. and Patreon tomorrow night at 6 p.m. We hit that music drop like a boss. I love you guys. See you.